Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Well, we're going to do just that. Stay informed, get an update on what's going on in the second quarter earnings season with our research director, Shiraz Mian, who joins me now. So overall, one-word description, positive, negative, this earnings season so far?
Negative.
Okay. So let's get into the details.
That's
here.
always a tough question.
Yeah, I know. Let's get into the details here. We're talking on July the 27th. In today's earnings preview, you wrote that earnings growth, hard to come by. We discussed before the season began that the Q2 season would be a little bit of a disappointment. More disappointing than expected?
I would say that. I think it is weak. The outlook remains negative. But as far as my expectations are concerned and what I was looking for, I wouldn't say I'm disappointed or they're weaker than what I was looking for. I have a slide to share with you, and that'll put that comment in context. The left-hand side slide is showing the results thus far, the growth rates for the companies that have reported results, earnings and revenue, and compares the growth rates to what we saw in Q1 and the four-quarter average. So you could see that the growth picture is extremely challenged, as you refer to. The right-hand side chart shows the beat ratio, the surprise ratios. And in there you would see that more companies are beating EPS estimates. And even on the revenue side, which otherwise is fairly weak, even there the beat ratios are tracking levels that are above what we saw at this stage in Q1.
But is that because they're coming from some low expectations to begin with?
Absolutely. The expectations really came down ahead of the start of this earnings season, but we saw that in Q1 as well. But in Q1, the revenue beat ratios particularly were at extremely depressed levels. And we started out at those depressed levels this earnings season as well, but over the last couple of weeks they have improved to the extent that they are better than Q1, but still below historical levels.
Another story going on out there is the disappointing sales numbers that are coming in.
Sure. Yeah, the revenue picture is unusually weak, both on the growth side and as I refer to in the slide, on the surprises side. So there's effectively no growth.
So So you have headwinds out there that remain the same as when we talked about them a few weeks ago. You've got a strong dollar, which may put some pressure on the earnings of the multinationals. You've got falling oil, and you've got the China story. But is there one of those three that's going to put a real drag on earnings?
You know, all three are important. If I had to pick one, I would say that the oil story in the aggregate is having the biggest impact. When we look at Q2 results, earnings growth in particular, as a whole, combining what has come out with what is still expected, total earnings are expected to be down about 3%, 2.7 to be precise. But if you take the oil drag out of it, then earnings are expected to be up about 4%. So there is the biggest component is that what's happening with the energy sector. Total earnings for that sector are expected to be down more than 50% from the same period last year. So the biggest drag is that. But then the strong dollar is across the board. Pretty much every company that's selling stuff abroad is complaining about it, and China is becoming a big issue. It's pretty much most of the companies are complaining about it. Perhaps these few handful of companies of the likes of Apple and stuff who had great numbers out of China. Everybody else has been mentioning China in the negative context.
All right, let's run down the scorecard.
Okay, so as of this morning, we have 190 S&P 500 companies have reported results. These 190 companies account for 52.2% of the index's total market cap.
Okay.
As you could see in the scorecard, 3.5% earnings growth for these 190 companies, 72.8% beating EPS estimates, 0.8% revenue growth, and 53.4% beating revenue estimates. the second last row shows the same results on an ex-finance and ex-energy basis. And this following slide provides you the summary picture. So combining the results that have come out with the still to come results, and here, as a whole for the quarter, 2.7% earnings decline on 4.8% lower revenues. And as you could see here, the last row, if you take energy out, then total earnings are expected to be up 4.2% on 1% higher revenue. So revenues are weak. The overall growth picture is very challenged. And then on top of that, you have the drag from the energy sector.
All right, so trend-wise, anything surprising you this earnings season as far as trends go?
You know, the widespread references to China as a negative is something that I'm seeing for the first time pretty much in recent quarters consistently. China will get mentioned in negative terms, but it is becoming a more pronounced and a more notable factor. That's one thing on the negative side. On the positive side, there's revisions for Q3 that are negative, that are along the lines of what we have been seeing in other recent periods, but not as bad as we have been seeing over the last few quarters. So there is a mix of positives and negatives.
So do you expect, just to clarify, do you expect this earnings decline to continue for Q3?
Oh, absolutely. Absolutely. There is the estimates for Q3 now are looking for negative growth in Q3 and negative growth in Q4 as well. I have a slide to share here, and you could see that in late March, earnings in Q3 were expected to be up, just barely up, 0.2%. They are now down to minus 4.2%, so a big decline in estimates for the quarter. And you could see that it's not just Q3. Earnings are expected to be down in Q4 as well. In fact, as we have been saying for a while now, that the entire earnings growth for this year has effectively evaporated. Now, earnings in 2015 are flat with 2014, and a lot of hopes are riding on next year. So folks are looking for double-digit earnings growth in 2016.
All right. Well, I'm sure we're going to be checking in with you again before the season comes to an end.
Sure.
In the meantime, in between these video conversations that Shiraz and I have, you can always see what he's thinking about day to day. Because he does write about earnings season in his Ahead of Wall Street column on Zacks.com, and he does put out a written commentary on Zacks.com as well. Earnings trends, it's all there. You can link to it all generally off the homepage. Now, you can watch these videos in a lot of different places out in syndication, but if you happen to be watching them on YouTube, don't forget you can subscribe to them there, and you can also comment on them. Meantime, with Shiraz, I'm Terry Ruffalo.